Good morning. This is Bill Black with Northwest Funding Group. Just want to go over this current market today. So things went well yesterday, and so here's the mortgage-backed securities, our 5.5% coupon that is where mortgages are based off of mortgage rates. We have 11 basis point improvement today. So as we can see here, this was when we were at 5.99 right here. The Feds announced that a bunch of fake jobs were announced, so that looked like inflation was going to continue, and rates went all the way down to about 7.1 down here. Since then, we've had this is when the kind of the bank imploded, and we've had some recovery here. We think the Feds are not going to be increasing rates, which they have. They only did a quarter, and so what we're looking at is we're touching on this 200-day moving average right here, this blue line. And so we've touched it. We went above it a little bit. If we're able to get past that and close a day past that, we have some room to go. Here's the next ceiling up here. And so we have definitely some room to go to get us back into this 5.99 range here. This would probably be more like 5.5% here, and maybe all the way down to 5.25 if we were able to gain that momentum right here. So the whole thing is the Feds have said that they're only going to increase rates maybe a quarter, and that's about it. So we'll probably see some. By the time we get to the end of the year, they're going to start lowering those rates, which is going to make things even better. So as you can see here, things are looking real good. We also need to take a look at this 10-year Treasury, and the 10-year Treasury. Let's see, pull this 10-year up here. If the 10-year Treasury is hitting way low, it was all the way up to 4%. So down to 3.38, we're in some pretty rough territories here, which could be pretty volatile. But as you can see here, we are actually under the 200-day moving average down here. So if we continue the drop of the 10-year Treasury, this 10-year Treasury, when it was at 4%, that's exactly why the banks they imploded. They have a 2%, 3% coupon that they needed to trade for $1 billion in dollar bills, and they would get 4% over here when we were sitting all the way up here at the top at 4% in this range right here. This is kind of when things imploded. So the 10-year continues to drop in value. That's meaning the mortgage-backed security is looking good, and we're heading in the right direction. So I would say right now, between now and the next 30 days, if this continues as the pace it's going and as expected, we're going to see rates hitting the fives and back to a crazy, crazy market. So hopefully all that makes sense. I'm not sure why this is still taking forever, but basically a good day in mortgage rates, and we're going to continue to float into with our finger on the lock button. Thanks. Have a great day.